Hello investors and traders, today I'll speak about 3 best dividend stocks to buy right now in this month for the next month. So let's start with the first one. It's Pfizer. Look, Pfizer already down more than 40% its performance since the beginning of the year. If we'll check it from its high levels, so this stock is down more than 50%. It's very impressive correction in this company. Look, by the way, before the COVID, the coronavirus crisis, it was 37, now it's already 30, so very tough correction. Of course, its dividend yield more than 5%. For me, it's very impressive. And let's have a look on the fundamental parameters of this company. So market cap is 170 billion bucks, dividend yield, as I told you previously, more than 5%. This company, by the way, look, the P ratio is very cheap, 8. The average for S&P 500 is 15. At DPS, price per revenue is only 2. So here it's dynamic for the last 5 years. We see that its valuation parameters is now very cheap. Here we see that the revenue of this company continue to grow, and the profit margin is 31. Actually, for me, it's quite comfortable parameter. Most of its revenue the company of course earns in the Europe, more than 40%, but see a nice portion, about 20% developed Europe, emerging markets, Japan, and the rest of the world. Only 43% the company pays from its net income as a dividend, so the payout ratio 43. It means that less than half the company pays as a dividend, so it's a very good figure for the investors. The dividend history, we see it's quite nice. Of course, we'll check it more closely, but at least last 6 years the company increased dividend payments. The financial health, look, the amount of debt is decreasing. 4 years ago it was 53 billion bucks, now it's only 39. Of course, the company has debt, we can check it here. It's, look, my custom stock screener. So yeah, look, Pfizer, its performance more than 40%, the PE very cheap, net income margin for the last quarter is 27, so very nice, very highly marginal company. As I told you, debt to EBITDA ratio is only 2. It's no problem at all. Interest coverage is very strong, it's 16. And Altman Z-score, it's also very nice company. Altman Z-score, I remind you, it's showing us the probability of default in the future, in the near term. So any problems at Pfizer company. Current ratio also very strong, well more than 1, and the EPS, earning per share, grow last 5 years is about 10. The dividend yield for me is very comfortable, payout very low. And of course, the 3-year dividend growth is more than 3%. Also here we can see that the dividend increase track record is 12%. So for me, as a dividend investor, also very positive and a good information. So generally speaking, let's move to the chart. My opinion about Pfizer. By the way, we'll move to the daily time frame. Look, it's no dividend. On the 31 of October, it's a few days from now, the company will announce its quarterly reports, quarterly data. So of course it can influence very significant on its stock price. But anyway, the correction already very strong, very nice correction. As I told you, more than 50%. Nice dividends. The company still continue to earn money. It's profitable company. And I told you, the debt to EBITDA ratio, interest coverage for me is very low. So that's one of the many reasons why I continue to buy this stock in my portfolio. Let's move for the next stock for today. It's Merck company. It's a healthcare company. So look, Here, look at the chart. In my mind, here it was last year's triangle, A, B, C, D, and E. Then we grow. By the way, it looks like impulse, the first and the second, the fourth, yeah, it can be an impulse. So now we're in a correction. So now we're trading in a decreasing channel. The closest support level is about $90 per share. Also, it's very correlated with the S&P 500. The Merck company, dividend yield very close to 3%, and please pay attention that it's a huge company. Its market share is more than $200 billion. Very big company, Merck. So valuation, P ratio, here I think it's not correct, but 18, it's severe. The PS about 4, also not very high. The marginality is more than 20%. The revenue of this company continue to grow. Most of this company, if you'll check the revenue breakdown, is pharmaceutical and animal health, about 10%. The dividends of this company, the Merck continue to increase the dividend payments, nice dividend history, and the debt is decreasing. Of course, let's check it's a little bit closer. So Merck, its performance about 7% this year. PE, I think this figures is not correct. I should recheck it. The debt to EBITDA is 3. It's little bit elevated, but anywhere look. Interest coverage is 10, so if it's more than 5, any problems with that. Also, the current ratio is more than 1. I remind that current ratio is the ratio of current assets to current liabilities. So the ability of the company to pay its debt liabilities in the near term in 1 year. So it's for Merck, it's okay. The EPS, very nice performance of very strong growth in the net income growth. The dividend, as I told you, is very close to 3%. The payout very comfortable, about only 50%, and the dividend 3-year growth is more than 7. So it's telling me that the company continue, me as a shareholder, even to continue to increase the dividend payments, and the increase the dividend history of dividend increase years is 12. So for me it's quite impressive figures. Let's move back to the chart. So from its high levels, yeah, I see correction already more than 40%, and of course the dividend yield now, and of course it's a huge great company. So Merck is the second stock that I will buy now. I told you that now I'm expecting a correction in the market, but carefully I'm just adding dividend stocks, dividend shares to my portfolio. And let's together choose the last stock for today. So Pfizer in Merck I already bought on my portfolio. Look, Vale, it's a lithium stock. It's related to commodities sector. I already have in my portfolio, but here the Altman is not so high. So also we have the ExxonMobil oil stock. It's a huge company. But I have a lot of oil related stocks in my portfolio, like dividend stocks, of course, like Kinder Morgan, like Valero. So ExxonMobil I'm not interested now. So most probably today, let me see, it will be UPS. Yeah, UPS, look. Market cap more than 100%, billion bucks. Its performance is down more than 20%. The PS, price per revenue, is very low, only 1. Here, by the way, is the fair. It's my calculation. It can be 2, but here is only 1.2, so very low. It's profitable company, very comfortable amount of debt. The EBITDA ratio only 1.2. By the way, it's the last updated data figures here. It's updated automatically. from internet, so I trust to these figures. And of course the current ratio is more than 1, and the dividend yield very close to 5%, the payout ratio very low. And please carry attention that 14 years they did increase dividend increase, the amount of years that the company increased dividends. And of course the 3-year dividend growth is also why very interesting. Here 4.8 and here 4.8. Let's move to the chart of UPS. So here look, last few years you trading in decreasing channel. In my mind it was the first wave, the second, the third, the fourth, and the fifth. So the fifth wave, I'm not sure it finished, but it's very close to its finishing. It's down already more than 20% in this year. Remind this company is a transportation company, Airfracht and Courier. So by the way, from its high level, the stock is already down more than 40%. So as I told you previously, the dividend yield more than 4%, very close to 5%. The upside potential is, I guess, here is significant. And of course, let's have a look historically on the PS ratio. Now it's, look here, it was 1.7, 1.6. Now it's only 1. It means that $1 of this revenue you can buy actually by $1. So it's in my mind very, very cheap. And the momentum indicator, the RSI here on the weekly time frame is 23, that telling us the stock already very, very oversold last time. By the way, it was the Corona, on the Corona period a few years ago, but here it was 26, now it's 23, so the stock already very, very oversold. Nice opportunity, I guess. Maybe it was a report here. So look, yeah, it was a report 2 days ago. The EPS, actually it was in the very close to the expectations, and the revenue is here. It's very funny. It won 21.06, but expected the 21, so it down more than 1%. The negative surprise for its earnings, but we see a negative reactions. By the way, the S&P and Nasdaq also showed us a decreasement. Anyways, any case, that's the stocks for me that I'm buying now very, very sincerely. So EPS, Merck and Pfizer. Nice dividends. Yeah, let me choose it here in online, in real time, as you like it. Yeah, so it's my 3 dividend stocks for today. Very poor performance in this year. All of them are huge companies, $100 billion. Very nice. They're profitable companies. Any problems with that? And the dividend yield, of course, here look, the dividend yield, its average dividend yield about more than 4%. And of course this company continue to increase its dividend payments. So it's my view, it's my top picks for dividend stocks for now. If you're interested in stock market, dividend investing, of course, don't forget to press the like button. Please subscribe to my channel, and see you on the next time. Bye.